Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Dyson Chauskas. But today is a special session. So, guys, look, today we have I'm hosting a an event with another fellow presenter here on TradingView. So yeah, guys, I hope you'll like the session. So before we start jumping into the session with him, guys, I just wanted to, like I said, get you all ready, prepared, and I hope you have your coffees, teas ready. So this is gonna be just a relaxed, nice session. So yes, we will have a look at the markets. But yeah, look, before we start even going into that, I just have to quickly run through the risk disclaimer with you guys. So, yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so also before we jump into the session, just a quick mentioning of our Easy Markets website, which you can always check out for more information about it. If you have any questions, yep, reach out to us. We'll be happy to assist. So now then, guys, let me now just quickly prepare the screen here, and let me just quickly jump into my fellow guests, and just a second, one more adjustment, and there we go. I think that I will be jumping in right now. Just a second. Right. JinDao Tai, can you hear me? Can you hear me right now?
I can.
Fantastic. There we go. So I hope everybody can see us and hear us. Let me just adjust my screen a little bit here. Okay, fantastic. So look, before we go further, let me do the honors of introducing you. So to people who maybe are not aware who you are. So I'll just give you a quick briefing, basically. So JinDao Tai is a trader and trading coach from Singapore. So Jin developed his own trading strategy and to date has shared his experience and educated thousands of individuals worldwide in the currency markets. He has successfully made his name as a speaker in the areas of wealth creation and wealth management and is regularly invited to speak and motivate at events. He's also a regular streamer on TradingView, sharing his market analysis on a daily basis. Did I forget anything? Please.
No, you got it all. You got it all. Super happy. Thank you for the invite. Glad to be here, sharing with everyone about the markets, talking about the markets. And I think a lot of people watching right now would probably have gone through the journey that I've gone through. So I started off as a retail trader. I started off as a part-time retail trader. Through the years, through the ups and downs, sometimes a bit more downs than ups.
As everybody probably, yeah.
Yeah, figured out a way just bit by bit. Did it part time, realized I could trade at night, and then after that, tried it in the afternoons as well, and then took the leap, did it full time. I used to live in Australia, moved back to Singapore, and never looked back since. Super happy to be on this journey.
Good, fantastic. Look, look, me personally, I like to speak to individuals like that because in a way you're kind of, we're following the same path in a way, in our lives. And in general, yes, I think that a lot of people are also interested. And if basically somebody's watching this show right now, they're probably interested in trading, I'm assuming. But yeah, I think that a lot of people do want to kind of reach that point, reach kind of the ability, the possibility to just like trade on your own, do like be your own boss, right? Let's talk like those guys on Instagram who are like, posting all that.
I was just about to say
Yeah,
we're not going to
exactly.
get to the Instagram stage.
True. Look, I mean, for me, like we will. Okay, look. Before we actually go in further, just wanted to kind of explain to everybody who's watching the format of the show, how this is going to go. We will have it's going to be a relaxed session. We're just going to talk about the markets a little bit. We're going to jump into technical analysis, pick up on some fundamental analysis. If somebody does have a question or something, look. Let's maybe have a Q&A, a little bit of a Q&A session at the end. However, if somebody does want to look at the certain instrument, they can post it in the live chat box. I will look at it. But if suddenly, I don't know, if suddenly there's going to be like a lot of people requesting different instruments, I do apologize in advance. We're not going to be able to look at all of them. So, but just like I said, just as we're also kind of in the frame, we're in a time frame. So, unfortunately, guys, but like, yeah, we're welcoming any questions, any comments, or any, like I said, requests for an instrument. But we do have a few that we really want to pick up first, right? Yeah, look, also another thing before we start jumping into the charts, I just wanted to ask you personally, JinDao, like, for you, what do you like? I mean, the psychology part. Do you think that? I mean, how do you approach that all that thing in trading? What's your kind of understanding of how you should play around it? Like, in terms of psychology, in terms of like mental. Yeah.
It's. I was just talking to a guy about this yesterday, and I see the guy's nickname on the chat as well. It's quite interesting. I might approach it a little bit differently, but everyone knows me as the FX guy. I'm the trader. But for me, when I'm not sitting in front of the screen, when I'm not looking at my charts, I don't know anything about where the price is. Right? I have no idea where the dollar is, where the yen is. So for me, it's when I'm sitting down, I'm full on, I'm trading. But when I'm not looking at it, I switch off. So I think that a lot of times people that I coach are 200% into it. They get burnt out. They get overcommitted. They get burnt out. It becomes a little bit of analysis paralysis in that sense as well. Yeah. To manage the psychology, to manage the emotion, do take some time out. Have time away from the screen as well.
I totally agree with you. I mean, the same. This is something that I had to master in myself as well. This word indifference, I think that comes into my mind, and I totally agree with you because while I was kind of constantly thinking about the markets 24/7, and I'm like, and then you're overthinking. And probably you yourself, that then there's like and the viewers also know, there are like a lot of people who are saying like try to keep it simple, right? And well, to be honest, that is true. I mean, honestly, there's no like if somebody's looking for a holy grail, that is that. Keep it simple. Yeah. Like try to keep it simple. Like always have your stop loss in place. Risk only what you can afford to lose, and everything will be fine in general. So always evaluate your risk. But yeah, look. So right now then, before actually, you know what? Let's have a look at the first instrument. May I share the screen first, and then basically how we'll do it. Like you will share as well if you have an idea or you want to add something.
We'll fight for the screen time. That's fine.
For sure. For sure. Look, let me just do that here very quickly.
And while you're doing that, I'd like to for everyone watching, do drop a message, say hi, let us know where you're joining us from. That's my regular line that I say during every stream. So do drop a message, say hi, let us know where you're joining us from. Love to find out. And if you got any questions, put it in.
Yeah, absolutely, absolutely. Look, we welcome everything here. So we guys, I mean, look, this just to let everybody know that we are. This is our first kind of show like this. So from our side on Easy Markets. So look, we'll have some ups and we'll have some downs. So don't be too cruel on us. So you know, but just stay patient and we'll try to deliver a good show to you here. Now. Look, okay, the Dow Jones Industrial Average. This is something that I wanted to pick up on very quickly. Yesterday, as you know, we saw a bit of a rally in the U.S. stock market. So I think that yes, everybody got positive again. We do have the some important data coming out this week as well from the US. So the first one I just wanted to show you, and this is something that I've mentioned in my shows separately. So from the technical perspective, look, I talked about this idea where I said that, hey, maybe potentially we could be seeing something of a of a little head and shoulders pattern here. Now, and another thing that I mentioned before in my shows was that this level right here, this area around the 38,000 mark. Now, on my chart specifically here, I don't know, again, maybe Jin will have something on his side, but on my chart here, I kind of had and added this Fibonacci extension here, and I can see that the a holdup happened beautifully near that 50% and near that 38,000 mark. So we got a nice, beautiful holdup. We failed to kind of stay above that area, and we started drifting lower. Then we drifted a little bit downwards. I mean, I talked about this idea of maybe seeing a little bit of a larger correction, like a 23.6% retracement on the Fibonacci here, which is drawn from the lowest point of October to the highest point of December. But as you can see now, yes, we're drifting lower. We found some support not far from that 37,390 zone. Oh, and by the way, what the ones that I'm looking at here are the futures. So maybe the cash index, you might have something else in there, but what I'm looking at here are the futures, and we saw yesterday a nice good jump here to the upside. Now my question is, okay, for those people who are thinking that maybe it could go higher, okay, for me personally, I need to see at least a break through this barrier here, through the all-time high. Until it's going to be bouncing around somewhere here, I'm not really touching it. So once it starts pushing through this barrier, then this will confirm a forthcoming higher high, potentially maybe attracting more buyers into the game, and then we could go into positive territory for the month here on the futures I'm talking about. So but with the downside of still, there are people who are actually thinking, you know what, we had enough of a run, let's maybe go lower. Yes, there is of course, it would be really nice to see something like that. However, for me personally, I need to see it drop somewhere below this 37,390 zone, and then we could go from there. But again, that's from my perspective. I know that JinDao, yes, go ahead.
Do you feel concerned that it's at a multi-year high and historic high level? Do you think is there potential for that breakout?
For a breakout, yes, because in general, you know what? How many times I've been like thinking that, oh, it's the top, oh, it's the top, oh, it's the top. It actually, I have this kind of rule in my head. If you think that it stopped going higher, it will go a little bit more. So it's like, I know, I mean, I always have this rule in my head, and I'm like, and how many times I've got proven that I'm like, okay, look, I mean, if let's say it's, okay, it was the peak and I'm thinking that, oh, it's going to go a little bit more. Okay, give me a reversal signal then in that case. But at the moment, I'm not really seeing anything. And to be honest, I'm the person who likes to look at like daily chart, but I do look at like weekly charts as well, like in weekly and monthly charts, and I do like to look at those. And in this case, what I'm seeing here, look, the market is not giving up. And you're also following the Fed, right? And you know that there's like they're planning 3 rate cuts by mid this year, right?
Well, we got to get to the first one first. We can
Exactly,
get through the first one.
exactly.
Yeah.
And look, I'm kind of a person who's a little bit of a contrarian sometimes, and sometimes sorry. When I'm just to let you know, everybody, that if I'm gonna be stalling and pausing, that means I'm looking at the chat room in there in the box, and just trying to see if there are any questions or something like that coming through. So I do apologize. So Jin, please help me on that as well. I mean,
Yeah, for sure.
if you see a question in there or something like that, we can pick up on that. But yeah, in terms of the Fed, look, I've mentioned this in one of my shows as well, that it's a beautiful, they've made it beautifully, in my opinion, because look, they don't want to go for any rate hikes more, right? Because they think that, oh, okay, there's like already enough, right? But if, let's say, inflation starts picking up again for some reason, I don't know, maybe because of the supply chain disruption or something else, if, let's say, inflation starts picking up again, for them to have this opportunity to say, like, for them to have this, like, opportunity to play around with the expectation of a rate cut. So basically, let's say I'm currently saying, oh, I'm gonna do like 3 rate cuts because it's my plan. But however, inflation starts picking up again, then you say, you know what, actually I'm gonna do 2 rate cuts instead of 3 rate cuts. And this way they're like, oh, the market gets spooked, and like, and goes down a little bit. So, and inflation gets controlled maybe as well this way. But again, this is my idea. I don't know if it's gonna, like I said, if it's gonna work out this way, but I'm just, like I said, I don't know. What do you think about this whole 3 rate cut thing?
I'm not sure. For me, I approach it step by step. So I'm a bit more short term.
Okay, yeah,
I don't
logical, yeah.
I don't plan too far ahead. I'm just looking for the first one. And initially, we were thinking March, but it looks like March is probably off the table. The next one's April. April seems like likely. I think they might do a small rate cut just to see how the market reacts in April, and then maybe take a pause from there. So it might not be a consistent move. It'll just be, all right, we'll do a bit of a rate cut in April and see what happens from there.
Well, we currently, if we're looking at the Fed Watch tool, I'm just looking at it right now, and we can see that there is, for March, the current expectation for a 25 basis point cut is 57.3. So again, I think that will eventually excuse me, even out, I think, and then we'll have a surprise, like in the market. Oh, nobody's doing anything, right? So it's like, so yeah, I totally agree. But look, let's have a quick look at the US dollar. I think that
And just to add as well,
yeah, sure,
it's
go.
quite a while away before we get to March. A lot more data, a lot more employment, inflation data that we have coming out this week. So it's going to be quite a lot more data before we get to that. Like you said, any shocks, and then March is off the table. Maybe April might be off the table as well, but I hope not. I want to see rates drop just to make things a little bit more interesting.
Yep, I totally agree with you. By the way, with the CPIs, this US CPIs there, which are coming out on Thursday, the core and the headline, year on year, month on month. What do you expect? Like, I mean, at the moment, the forecast is for the core year on year to drop from 4 to 3.8, and for the year on year headline CPI to actually rise from 3.1 to 3.2. Yeah. What do you think? I mean,
hey, everyone else in the chat, put it in. Everyone who's watching, put it in. Tell me what you think as well. And in the meantime, I'll share my view. I actually think that we might see that small increase.
Sorry,
we might see a small increase in the headline CPI.
I agree with you on that one.
3.2 reasonable, maybe even 3.4. I mean, we saw wage inflation from the NFP last week staying at 0.4%. So it might come in, and that's gonna push out the timeline a little bit more towards April.
Exactly.
the rate cut scenario.
I totally agree. You know what's fascinating? You know what I really like when people agree, when people think what I'm like, what
I
I'm
love it when
thinking.
people agree with me.
It's like, this is amazing. I like this one. Yeah, and for everybody's who's like, who's watching. Oh, this is like a, everybody, they agreed on stuff like that. They, they prepared. They have the text written somewhere there. So But anyway, okay, look, let's jump into the charts. DXY, this is something that I wanted to pick up on. Look, this is something that I've mentioned as well in my previous sessions. Basically, from my side here, we had a little bump here. We climbed above this little downside line, this one. But again, this is a very tentative line. However, the more important one is this one right here. So we're currently getting a hold up. So the US dollar is struggling right now to kind of go a little bit higher. However, it's also struggling with the downside. Now, from on my chart here, and again, I'll let you, Jin, after this, kind of jump into your chart because it will be very interesting as well. Basically, from on my chart here, what I'm seeing is is the a little hold up here near this 101.5560 territory. And in a way, some of you might say, but hey, maybe it's an inverted head and shoulders pattern forming here. Look, whatever it can be, for sure, yes, maybe, I don't know, but the thing is that even then you still need a breakout. You still need a breakout, and until then, maybe like we could actually have a look at this little hurdle here, this 102.38, if somebody needs like a specific level. However, again, I'm looking at this downside line. I'm looking at this area. In general, I don't look at specific levels. I look at the areas. And for me, this area, if I see the index staying above this area, then great. Maybe this could attract more buyers, and we could see DXY going higher. However, at the same time, you have to respect the trend line. So if the trend line remains intact, then yes, I mean, there is potential for the downside. But for the downside, for me personally, I'm looking at this little area right here. Like I said, this zone, I like it for now. If we start dropping below it, I'll start looking at some lower levels. However, to get even more comfortable for me personally, drop below this little territory right here, this lowest point of December. Again, maybe it's a little bit, I'm missing out on a bit of territory right here. However, I like to keep it on the safe side. Jin, yes, I mean, do you want to share your screen?
Sure. And do you find it weird that the market has, or the dollar index has been relatively quiet, consolidative over this last couple of days?
Yes, it seems the case. I mean, it's for me. I'm looking at it and I'm thinking like either the dollar traders are waiting for a some sort of an event. Maybe the CPIs could help. So maybe that's the case. So like I said, yeah, we'll see. We'll see. At the moment, I'm waiting to see what's going to happen there. Other safe havens are kind of moving a little bit, but dollar is dollar is data dependent right now. So yeah.
Very, very data dependent, as they always are. Very interesting spot. Right after you said it, then it hit me that there is that inverted head and shoulder. I do have 102.88 as well, and that's a good 61.8 retracement level there. I'm very concerned, with that consolidation heading into the CPI. So that's why I'm thinking, hey, we might see a 3.2 or maybe even a 3.3. Might see the dollar push to the upside first. Continuing on with a good downward trend, you need that retracement before heading lower again. So generally what I think it looks like, especially if it does break out of that inverted head and shoulder, we might see a retest to a greater extent, that 104.30 area, about there. And then maybe after that, I would love to see that come back down. In the longer term, this would be, heading into months ahead, with more talk about, or when data starts to settle down and we start seeing more talk about rate cuts scenarios coming from the Feds. So actually, one interesting thing I did previously was on the dollar index here. This was something I did at the start of the year.
Mm-hmm.
I'm trying to do quarterly analysis, looking for it to come up to, and it still stays at same level at 104.30, and then we might see that retrace
Yeah.
back down again. You see that big channel to the
Yeah.
downside on the dollar index, so might test that resistance and that top of the channel before pushing back down.
I agree. I mean, I have this downside line, the big one, basically on the top. So the upper side of your on your channel, on your chart, the falling channel, I have the upper side. So basically, just the trend line. So that's kind of the target that I'm kind of hoping to see, like, getting tested. I don't know, but for that, yes, in general, I'm loving the area right now where we are at this point. Because maybe we could be seeing a start of a higher low. So from the short-term perspective, I'm talking about only like the recent reversal that we had here in the end of December.
Right about there. Yep.
The end of December reversal there, and basically now this little correction back down. Maybe this is, like I said, maybe it's gonna stall somewhere around this 101.5560 territory, and then reverse back. Maybe, like I said, maybe inflation will give a boost, and we can see. Yeah. So, what's your projection for? Let's say, okay, I know we don't have a crystal ball here, right? But let's assume. What do you think, or what would be interested to see, like, say, by the end of this year? I know it's a long shot. I know you said short term. I am short term as well. I agree.
Yeah.
But hey, for fun.
For fun, as much as I have this arrow all the way down, I think that the dollar seems like it might actually just stay about. I don't think it will go any lower than 95.
So basically, let's put it this way: below 100. So you think below 100 at the end of the year?
Yeah.
Yeah. Okay.
Yeah. And just one interesting thing as well is if you look at the dollar since for last year, 2023, for all the things that we had last year, it's only gone from 100.90 all the way up to 107, and stayed within quite horizontal. As much as it's been trending down before, it's been quite horizontal. So maybe we might see a bit of a drop, and then it will stay between that range there.
Okay. That seems logical. Yeah. Okay. No. Well, in general, I'm also kind of expecting the dollar to actually remain below 100. Don't know exactly where, but below 100, something tells me that this could be a case. Especially if we're going to stick to those aggressive rate cuts. In general, for me, like, first you go rapidly to the upside with the rapid increases, and now you're suddenly saying, oh, we need to drop the rates quickly as well. So, for me, again, like I said, me being the probably contrarian in everything, and I'm a skeptic of all the things that are out there. Look, for me, I'm seeing it this way. When you cut rates, you try to stimulate the economy, right? So when you increase rates, you try to cut down inflation because the market maybe is a little bit overheating. Now, if you suddenly come out at the end of the year saying to me that, oh, you know what, next year we just have to go like strong into rate cuts, right? So for me, like I said, it's giving me the idea either you have overdid it with the rate increases. However, okay, let's assume, yes, inflation was crazy, and like not assume, but the inflation was crazy. And rate increases helped control it. But now you're telling me that you're going to suddenly go into aggressive rate cuts. So are you you're expecting the economy to go down, and you need to kind of be one step ahead, to kind of stimulate it, or I don't know, honestly.
It looks like that. I mean, with how you had the DJI rather topish, we might see that recession that we've been talking about through last year never happened.
Yeah.
Maybe it might come around a little bit delayed. One thing to add on the dollar index as well is that I think it might struggle a little bit sub 100. just because if they start talking about rate cuts,
Mm-hmm.
other central banks, the Bank of England, the ECB, they're all talking about adjusting their policy as well.
Yeah.
So we might actually see the dollar find a good footing, not because of stronger dollar, but just weaker pound or weaker euro.
Mm, true, true. I agree. Okay, look, let's jump into other instruments. We have a few to go through. Look, it's for everybody who's watching and listening. We're not going to cover way too many, but we'll try to pick up right now on a few. Also, we understand that we're like time limited as well. So yeah,
We're going to go for 3 hours now.
yes, exactly. I think I hope you have enough supply of tea and coffee, and we you can sit here with us for 3 hours. And I think maybe we'll do one day like a session like that. Like if somebody's really like a real TV show. Anyway, so let me just jump into another chart that I really wanted to pick up on here, and let me just Okay, and it's not the Dow because the Dow we have already talked about. Very quickly on GBPUSD. Look, I mean, we are gonna try to remain relevant because this week we do have the British GDPs coming out. So at the moment, let me just refresh my memory. The GDP month on month is expected to actually improve from minus 0.3 to plus 0.2. Okay, look, I mean, at the moment, what can I say here with the British pound? On my chart, again, maybe you have something else, Jin. On my chart, I see some sort of like a little range here. Overall, we are on an uptrend because we have been moving higher here. However, we're struggling right now with this 1.28 territory, roughly. So in order for me to go higher, I need to see a clear breakthrough that area in order to go towards the 1.29 or maybe the psychological 1.30 zone. But for the downside, what I'm looking at here on my chart specifically, 1.2615, that's what I'm looking at in order to consider a move lower because again, on my chart here as well, we could get a nice drop below the 50-day EMA. Then we could start examining the 100, the 200-day EMA, and maybe even if we clear all these EMAs here on my chart, then we could go for a larger correction to the downside. Now, again, for now, I'm just observing this one while we remain in this territory. I'm just observing the price action. I'm not really touching it. However, if the US dollar starts pushing nicely to the upside, maybe this little formation will be something like a little ugly head and shoulders pattern with the left shoulder being here, head, and maybe this is where we're creating a right shoulder. But again, just a theory, just an idea. Still, either way, personally, for me, I need to see a drop below this territory somewhere in order to get a little bit more comfortable with some lower levels. So again, Jin, I don't know. You want to? I'll pass.
What was that? What was that lower level again?
Sorry, on my side for the potential, let's say, examination of the
Yeah.
downside,
Yeah.
the 1.2615 right here, roughly.
Okay.
So that's what I have
All
on
right.
my chart. Again, you want to
Yeah.
have a look at yours? You want to? I can share.
Yeah. This is where it gets a bit, I wouldn't say annoying, but confusing because I'm like you. I'm looking at the trend on the pound dollar and I'm thinking, it should be trending to the upside. It should be continuing. We have that resistance in this area here.
Yeah.
No reason why it couldn't test that level again, pushing up, especially with a stronger GDP number or a change in that GDP sentiment as well. But expecting that dollar index to maybe gain some strength on the inverted head and shoulder that we were just talking about. You had yours level there. I'm actually looking at to be a little bit safer. I don't really like getting into counter trend trades. So it really needs to go past maybe even 1.25
Oh yeah,
for
sure,
me
sure.
to
Agree.
start,
Yeah.
for me to really start thinking that maybe that move, this is that correction, and then breaks past 1.25 before we'll see that downward move. And how I look at this, I possibly would think that if we zoom right out, the upside seems a little bit more limited
Yeah.
compared to that potential correction back down again,
Yeah.
especially with that dollar strength. So maybe near-term target might be a test, another test of this resistance area before breaking 1.25, and then I would love to see it come back down to 1.21 as that big
Uh,
support level there.
True, true. I agree. Well, look, for me, the 1.2615, that's going to be the start of looking examining the downside. So yes, of course, if it starts clearing those other support levels, fantastic. It can go as much as it wants to go to the downside. The only thing is, I'm trying to be okay. Look, no, that's perfect. That's perfect. At least we are on the same page on that one. Can I just quickly share my
Sure.
screen?
Yep.
Just a second. Yep. So I
Now
want
we
to
got a
quick.
question there. What is the neckline level, and if it breaks, entry on breakout or wait for retest?
Once again,
From
where
Diana.
there was a comment? Just a sec.
Yep.
Okay. Yeah. Okay. Well, this is where this is a very thin line where you cannot basically like, we really cannot look. On this show, we're trying not to give advice in terms of like where exactly to enter and stuff. I wish I could be a little bit more flexible on that side, but hey, look, in general, I would say it's up to your interpretation because we're here to kind of show you, what's on the chart. You can see all that stuff yourself as well, but in general, you kind of go from your own, let's say, analysis. Go from your own, just don't follow blindly anybody. Just go from your own view
The
because
the disclaimer the disclaimer applies. That's
exactly,
what I
exactly.
yeah.
So it's like, look, this is, for example, this is what I would do, right? But again, Jin, you'll probably agree on this one with me. So, what works for one person that might not work for the other. So, and this is
Absolutely.
absolutely. So it's like, for example, I can tell you that a lot of things work for me, and a lot of things, and the way I trade, the way I look at the markets, the way I analyze those, and the way I apply technical analysis is this way. Somebody might say, "Hey, you know what? I don't like your Dow theory. I like the Elliott wave theory." Right? I mean, okay. So I cannot say it's up to you. It's up to it's just let's say the way I always tell people is to gather all the information and then kind of put it through a funnel and then kind of see which one's the more logical one and apply that one. So there are so many analysts out there and everybody has their own opinion, so again, you might get lost sometimes in that opinion. So like I said, if maybe this idea will work, maybe this idea will not work. But again, because this is the market, how many times we've seen a pattern like like ascending triangles, right? I mean, according to all the TA rules, these patterns tend to break to the upside, right? Um, Not always, and this is where the problem sometimes comes in. And you're thinking that, oh, it's going to break out to the upside. No, it's actually breaking to the downside, and that's it, But that's what I'm saying. Just be careful. Don't blindly follow anybody. But however, when we are talking about these levels and areas and potential patterns, we're trying to kind of find some sort of logic in general, how to, because in at the end of the day, we don't know exactly what's going to happen, like I said, unfortunately. But yeah, but yeah, anyway, I don't know, like I said, sorry, Jin, I kind of went a little bit over this, me
No, no, that's
trying to
good
be
info.
very politically correct and stuff like that. So I get it, like, but like I said, it's very difficult to tell you that, oh, exactly at specifically that level, it will go down. No, it might drop, it might pierce through it might bounce around. Another thing that you probably will agree with me is like it pierces through, everybody goes in short, and then it kind of reverses back up. Everybody has a stop loss, maybe around that level or maybe a little bit higher. It takes you out and then goes down again. So it's like, that's why I keep saying wait for the at least the body of the daily candle to kind of shape up and see, if it's staying below there, then yeah, maybe it could have a chance to go further down. Please
Yep.
add something if you if you got
And
it.
hey, we might be wrong as well. So with all
Exactly.
that analysis.
Exactly. Right. Okay, let's jump into euro dollar very quickly. Where's my euro dollar at the end here? There we go. Again, this one's an interesting one. Wait, in terms of economic data this week, did we have anything from Eurozone? Something specific? No, I think it was like relatively quiet, right? Or am I
It's
missing
relatively
something?
quiet on the euro this time around.
Yeah, exactly. So basically, the pair will remain vulnerable to basically US dollar. What's going to be happening in there, in my opinion, this week. So at this point on my chart, I can see that what's happening here is like, yes, we after we on Friday when the NFPs came out. We had this a strong drop in. I mean, first of all, it's a strong spike in the U.S. dollar. It brought the euro dollar to the downside here. And on my chart, it beautifully came close to this upside support line drawn from the low of the 1st of November, rebounded from there, and now we are, in my opinion, we're stuck a little bit because look, on one hand, I have this arrow showing like, okay, a rebound from this upside line could happen, and so far it seems like happening. However, at the moment we're stalling, and I don't really like scenarios like this, so that's why my preferred upside scenario in the short run, at least, is from around this 1.1009 10, something like that. But even then, I will be very careful with the upside just because I have another tentative downside resistance line, which is around here. And basically, this is where maybe it could slow down. Maybe, it will start stalling again. So I think this whole area will be a bit of a mess. I think that maybe going more into medium term, we will have to wait until we get a clearance out of this little squeeze. Well, it's not really a squeeze, but kind of could be. So yeah, I don't know. Like I said, for me, in general, I don't like this area. I don't like this territory. However, I will probably like this pair even more or more if we start breaking this upside line drawn from the low of the 1st of November, because at the same time in my chart, we'll fall below the 50-day EMA, and then I'll aim for the 100 and 200, and then I will, like I said, consider a larger correction here to the downside. This actually could come in line with the idea which we were talking about the US dollar, for example. Let's say if it pushes
The
in the
recovery
near
and strength
term.
on the dollar.
Yes,
Yep.
exactly. Yeah. Can you share your chart, please?
Keep your chart. Keep your chart there because it's almost the same. And
Okay.
on a side note is that I haven't been trading. I was on a break towards the end of December
Yeah.
for 3 weeks, so I haven't looked at the charts at all. Came back to the markets, so to say, last week, and I just spent the whole of last week looking at charts. I was doing my streams. I was talking about it, and everything seemed to be developing. Right? It hasn't really found a direction yet. It's really developing, and that's what we're seeing here on the euro. It's just even with the non-farm payrolls, it's just pretty much set right across over the last couple of days. So I agree entirely. It's gonna most likely gonna bounce back up a little bit, but it's gonna be a mess within that triangle. But on the euro, the ECB has been talking about rate cut scenarios as well, or potentially rate cut scenarios. Still looking at that push to the downside, breaking that trend line, that bullish trend line, to push to the downside. So do nothing now. If the markets are sitting right across, you can't make it move.
Exactly.
Sit there, wait for it, let it break, then get in.
Yeah. What do you just for fun again at the end of the year? What do you think? Where euro dollar at the end of this year? And then we can come back at the end of this year and see if we were right or wrong. So
Hey, we should do more. We should do more sessions than one at a time in the end. But I
difficult, right? Difficult.
yeah, euro is one of the hardest one. It's
Yeah, no. Okay, let's simplify. Let's simplify. Above 110 or below 110?
Well, 110 is not very far away.
Exactly. This is where we currently are, almost.
Yeah.
Yes.
You know what? I would say above. No. I'll tell you what. I'll be the annoying person and say that it's gonna rain. It's possibly going to range between 105
Yeah,
and and
like 112, something like that, maybe. No. Oh, you're on mute. You're on mute. Something happened. You're still on mute. Something is, yeah. I think the. Okay, guys. I mean, can you hear me?
we can. Sorry,
Oh, there
am
we
I
go.
back?
We are back.
We
Yes.
can prepare all we want, and all the mic needs to do is just run out of battery.
Ah,
I've got
yeah.
another one, so
Good.
I'm back.
So you've got off on the upper level. So you said 105, and then the other one.
And the upper levels are secret, so that's why I turned it off.
Ah.
No, no,
I would say like
112.
maybe roughly around 112.
112. Yeah.
Yeah. Okay.
105, 112. Gonna stay within that range right across.
Perfect. Okay. Yes. Look. Okay. Now let's pick up on a few other instruments very quickly. So we'll just pick up on a few currency pairs. Excuse me again, and then we will jump into gold, and we'll pick up on a little bit on crypto, just as like a
Crypto's
final
been
note.
interesting, hasn't it?
Sorry.
Crypto has really been running like.
Oh, tell me about it. Right. Okay, let's very quickly look at the USDJPY. I like this pair a lot, and at the moment here on my chart, this is what I was talking about with viewers of on my show. Basically, after we broke up, okay, let's rewind a little bit. So after we've ran to that 151.52 territory back in mid-November, everybody was like speculating, okay, when will BOJ intervene? Well, when will BOJ intervene, right? I mean, because this, I mean, look, I mean, historically, right? I mean, we've reached the highest point of October here of 2022. We know that BOJ intervened then. We drifted lower. Then we started picking up the pace again here. We came back to the same level almost. And okay, I don't know if officially they have intervened or not, or was it like something like quietly under the table done, or I don't know. I have not crossed.
It felt like the dollar did the job for them.
Probably could be, yes.
Yeah.
So the dollar kind of declined. However, actually another thing that maybe could be the case, because during this period here in the beginning of, like, at the end of November, beginning of December, we saw actually more of a end of November, actually we saw some reports coming through where a few large hedge funds started buying a lot of yen, in a way of anticipating maybe that the stock market might not run all the time to the upside. Maybe it will reverse to the downside. And this is where, safe havens like JPY, CHF could come in nicely, right? So you're trying to be a little bit ahead of the game. So all those hedge funds, and I think that they've, made some money. I would say,
They made it happen.
Sorry?
It got 2 week 152, almost 152. It was a good buying opportunity.
Yes, absolutely. I totally agree. I mean, this
And
is.
I think if I'm not wrong, in about early December, there was some comments or rumors that the Bank of Japan was going to look to normalize on policy to get away from the ultra easing policy.
Yes. So basically, I think that they're.
But they quickly refuted that though.
Exactly.
They came back a week later and go, no, we're not
It's
doing that.
it's an interesting moment. I mean, in general, it's going to be interesting to see if suddenly BOJ jumps into those positive rates, right? But somehow something tells me that it's not going to happen yet. Again, speculation that sometime this year, maybe. I don't know.
Hey, the thing is, they have a lot of other tools to do as well. They
True.
can readjust that YCC. They can, adjust their policy. They can get back to their bond buying or reduce their bond buying. There's so much things to do, and also with the dollar potentially weakening again.
Yeah.
I'm thinking more downside on the dollar yen.
More downside on the dollar yen.
Yeah.
Yeah.
What do you think?
I'm kind of aligning this with if suddenly we start seeing a nice correction, decent correction in the stock market, then this is where, yes, this pair, I think that as much as the dollar would like to be strong, I think it will be overshadowed by the stronger yen. I think that everybody will just be jumping into safe haven in here. But at this point in the short run, I'm kind of, yes, I'm hoping actually see maybe a bit of a move to the upside here, especially if we look on my chart here. I have the we did the 38.2% retracement on the Fibonacci. We actually did last on Friday. We did excuse me, the there we go, the 50% as well, but briefly touching it on it. And I think that if we suddenly started reversing here in the short run, I'm talking about only in the short run. So if we start pushing back about the 144.54 zone, somewhere around here, which is, or actually no, sorry, 144.70 territory. If we start pushing back above it, then I'll consider a move higher towards the 50% retracement here in the Fibonacci, which is around the 146 level, or maybe even towards the 147.5, which is roughly around the 61.8 here on my chart. Now, but then I'll take a pause because in general I'm also that's my short-term vision. But in general, I'm also more leaning towards the downside, just because if we look at a broader picture, for example, even let's say judging from one of the tools that we can use are the, let's say, EMAs. I can see that the 50 has crossed the 100, and now it seems like it wants to cross maybe the 200. Like last time we crossed it to the upside, both of those. Then we rallied quite a lot. Now it's the first time that we are crossing it to the downside.
Yeah.
However, I don't know if it's going to happen something like here, where, yes, we're crossing it, we're going to go a little bit more to the downside, but then eventually maybe we'll find a floor somewhere here and then reverse higher. Again, this is, for now, it's speculation, just that. So, again, let's see. But in the near term, I'm kind of expecting maybe this one to go a little bit to the upside more, and then maybe find resistance and then go down. This is the support for those Elliott wave, traders, and ABC correction. So we have done the A. We're doing now. We could be doing the B, and now we'll do the C. So, we'll see. I don't know. What do you think?
I'm glad you're not asking me about Elliott wave.
Oh.
I'm terrible. I'm terrible with that ABC thing.
No. I look, I'm not a huge fan of those. I mean, people who are watching me, they know. I mean, I'm not a really huge fan of that. I like the Dow theory. I like the breakouts, and I kind of stick to those. Anyway, okay. Do you have anything to add here, Jin?
Yeah. Can I just jump in on that?
Share. Yes, of course. Share your screen.
All right. So just I would differ a little bit and say that on the dollar yen we might not see too much more upside just because of what's happened at that candle here. This was on during the non-farm payrolls where we saw that test up to 145, almost 146, and then ended up with that doji before the next 2 days, or yesterday and today, now showing a little bit of a downside. I'm thinking that if 145 holds, if that 145 area holds, 38.2 level holds there, we might actually see that as a good, strong resistance level, ideally looking for that downside on the dollar yen. So maybe even a little bit like that to the downside, or if this develops, just pushing lower from there, that point.
Yeah. Okay. No, makes
I
sense.
would be super cautious trying to buy it up.
I'm looking for a spike, actually, more of than let's say a constructive, let's say, trend to the upside. No, I'm looking for more like something like very quick. Normally, this is like sometimes what happens in the market. You just everybody's like expecting that. Everybody sometimes has this rational thinking, right? I mean that and I catch myself on this very often. Like I have this rational thinking. I'm thinking the market will do it this way because it's going to be like this is it's logical and it's this. Yes, in general it is. It is doing what I'm thinking it, but it actually additionally it walks around with those spikes, big spikes to the upside, to the downside, and then takes basically. And we know it's to take out the trader.
Especially the yen.
Oh yeah. True. Let's quickly jump into AUDNZD actually, because I'm just wary of the time. So
Sure.
let's jump into that one. You want to start while you're in your chart? You want to pick
Okay.
up on AUDNZD? Yeah.
AUDNZD. It's just sitting right across.
Mm-hmm.
I'm waiting for something to happen. I'll show you what I tend to look out for. Is as it sits in that 1.08 level, I do tend to turn off a little bit only when it starts coming. I'm looking for that reversion or
Mm-hmm.
that reversal back towards that mid level. So likely going to stay within this level, maybe push down a little bit. The levels that I'm most keen on would be when it breaks past. That's why I have an alert set up there and an alert set down there on the support and the resistance is once it tests 1.13
Mm-hmm.
about there or 1.03 to the downside. So because those are my 61.8 retracement levels, that's my big 50% there. So overall, nothing to do right now on the Aussie Kiwi, but I'm looking for that to possibly, push down a little bit for me to look for that retrace back up again.
Mm-hmm. Okay. Okay. That's interesting. That's interesting. Um, can I share my screen as well?
Sure.
Just a
Yep.
second. So, okay. So, on my side, right, I have this view here. Now, first of all, I removed like most of my lines just to have a kind of fresh look, basically here. I have this upside line, which is drawn from the low, the 18th of December of 2022. So this upside line, kind of okay so far, doing a good job, working out nicely. Now, as somebody else also sees that we're also having a downside line, but again, another downside line, which actually could be a little bit of a tentative one. And actually, there's not only one. For me here, I'm kind of overcrowding the chart with these trend lines here. So these are actually, this is what I'm going to be looking at in terms of the upside. If I want to go higher, I will go slowly, and I'll start slowly picking like on line one by one. So this kind of idea worked out for me well, so I kind of stick to it. So basically, if I'm looking at this, let me just adjust this very quickly. So if I'm looking at, if I'm looking at some upside, if we break my downside line, the first one, the smaller one, which is from the high, taken from the high of the 1st of November, then at the same time we climb above all my EMAs, and maybe this could be seen as a nice positive thing. Then the next target is this other downside line drawn from the high of the 19th of June of last year, which I'm going to aim for. If it gets broken, then yes, great, I will go further north. In general, this is my kind of short-term upside scenario. However, overall, if I look at the picture here, my problem is this: that we're kind of in a somewhat if like in a triangle or like a flat veg basically pattern or something like that. And it might stay around here for a little bit. Maybe it will, jump around these areas here. But if we look at it as from the triangle perspective, according to the TA rules as well, that look, the prevailing trend was to the downside before we got into the triangle pattern. So in a way, maybe in the long run or medium term, actually, maybe we could actually see a nice drift lower to the downside here overall. So I mean, I agree with you in terms of the downside, but probably what I think about is that I will allow it to walk all around here, do whatever you want, but if it starts breaking one of these trend lines, this one or that one, the bigger one, then this is from where I will get much more excited with the next directional move.
Yep.
Because in general, I'm kind of leaning more towards the downside overall. Even let's say going back maybe to the 1.05 area, something like that. But of course, for that I need to see a clearance, and like I said, the justification for that is the fact that the prevailing trend was to the downside. Yes, go ahead. Yeah.
No, no, I agree with that. Just different ways to
Look at
jump
it.
into it. Yeah,
Mm,
a bit of a mix between the short term and the medium term approach.
Yeah, sure. This is the as we already discussed with me and you, we really like this pair. Yes, I mean this is quite an interesting one. Actually, I think I find it very technical. So probably that's why, it's like when
It,
things work in
it
your favor, you
respects
like it.
it respects the levels very well. That's
Mm,
one reason why
yeah,
not very exciting at times, but when
yeah,
it gets to that level or it breaks a level, then you see it reacting very well to the levels.
true. Okay, look, we are kind of really going a little bit over our time right now, but
Yeah,
I hope the viewers will forgive us for that. Look, let's quickly pick up on oil. Oh, sorry, oil, gold. I had oil in my mind before, but gold. Look, I just wanted to quickly, while I'm on my chart, then I'll pass it on to you, Jin.
sure.
So look, on my chart is this way, that I had these two trend lines. Now both of them are a little bit on the kind of tentative side, I would say, especially but so far they're kind of doing a good job. So in that case, what I'm going to do, I'm going to wait. I'm going to play the waiting game, because I can see that on Monday we had a nice strong drift lower, but we still remained above this upside line drawn from the low of the 6th of October. So we remained nicely above it. It basically created a false breakout. So now my question is actually, will we get a nice rebound back up here? Well, in my opinion, I really don't care at this point while we remain in between these two trend lines, because this is very it might bounce around up and down here, but I will get really excited if we see a break of this downside line drawn from the high of the 3rd of December. If we get a nice break through it, then I'll target the area around a 2081.90 zone, approximately around here. But if that gets cleared, wonderful, we could be off to the this current all-time high which we reached in December. But again, that's in terms of the upside scenario. The downside scenario, because we're still very close to this upside line, okay, I'm not excluding the possibility of a drift lower here, especially if the US dollar starts picking up the pace. And yeah, but still, for me, I need to see a drop somewhere below this 2015 territory to get a little bit more excited with the downside. Over to you, Jin.
Like we were talking about the what was it, pound dollar, where or the US yen, where it's a little bit confusing with the dollar index.
Mm,
It's same with gold, right? It looks like it's toppish. It looks, and back how it reacted along the 2077 level. We saw it on early December. We saw it late December. We reversed very strongly from that point.
yeah.
I do have a couple of people who trade gold in that, no, actually physical gold dealers,
Mm-hmm.
and they say, oh, it's 2080 is at top. We're done with that. We're heading lower, and that was in December, and then we saw it test again. So at this point right now, with those trend lines, I like gold on the super short term or on the longer term. It's terrible on the medium term just because of the volatility,
Mm-hmm.
and it respects those levels very well. So same like you, I would look for it to break that bullish trend line, which would
Mm-hmm.
coincide with that 38.2 level. Then I would be looking for generally some correction back down again on gold. But hey, if we're looking at a correction to the downside on gold, that's supposed to mean that dollar is going to push up in the medium term, and we might see some. We were talking earlier, dollar might go up before coming back
Yeah.
down. So that, yeah,
I mean,
maybe something like that, and then back up again.
yeah, true. I mean, in general, I also I'm I've written like a little report on Easy Markets a while ago last year, basically about I'm expecting. Well, this is my view only, but I'm looking at gold around maybe 2,200, 300. Um, I do like that area, and if I can just quickly share my screen again.
Sure.
Sorry about that, Jin.
All right.
Uh, so there we go. So what I was kind of hoping to see here, and with my trusty tool, the Fibonacci extension. Basically, if I draw it from the lowest point of September of 2022 to the highest point of May of 2023, and then to the lowest point of October of 2023, then basically this is what I get. I get the 2,177 territory here near the 78.6. So this barrier here, the 2,000, kind of, let's say rounded up 100, is still an interesting target, like a psychological target, I would say. But if that gets cleared, I think that in a way, look, if in general, in my opinion, if we clear the 2000 kind of 81 zone, then it's like really increases the chances for this one to go higher. Then the next target is the psychological 2100. If we clear that one, then everybody's going to be thinking, oh, let's go to the all-time high. But hey, if we already got to the all-time high, why not to create a new one? It's like, this is like the rule of the market sometimes. It's like we go there, but like we already went there. So hey, let's go for a little bit more. And this is where I'm kind of thinking that it might clear that 2,144 eventually, and then just like I say, if we're, because we're gonna be stepping into uncharted territory, then you're trying to think of where the next level could be. And for me, at the moment, the only, like I said, logical explanation somewhere maybe around here, the 2,177, 200 level ish kind of. So, but again, a lot of clearances have to happen before that. So, and to be honest, I still like gold to the downside in the near term. It's like, because
I think it's good for a healthy trend, a bit of a correction back down again before pushing up. I wouldn't rule out 2,200, but on the way to that historic high, oh well, before that, a bit of a downside, but on the way to that historic high, it's going to get choppy.
Oh,
You're going to see it spike past a historic level and then come right back down and then back up again.
Yeah. That could be quite interesting. Yes, I mean, I'm not arguing with you there. Look, okay. Let's quickly pick up on some cryptos, and we will be wrapping up here. So, guys, in the chat room, I don't know, I wasn't Jin. You probably
I've been messaging me around.
You were probably looking at this one a little bit more. If there is a specific instrument, maybe you want to look at for us to look into, just drop it in there. We'll, like I said, we'll try to pick up on that one if we have enough time. But I think we're already running out of time. But look, I really wanted to pick up on something this here. This wild animal, the Bitcoin, right? I mean, so yesterday we saw some news coming out saying that there might be even approval this week for a Bitcoin ETF. So at the end of last week, we get like, oh no, there's no approval. There's not going to be an approval for a Bitcoin ETF this month even. And the crypto, boom, it sells off. Yesterday we get a report saying, oh, it's going to be this week, and we look at this, we rally. So first of all, I'm getting confused in all this, and in my opinion, in general, I was kind of what I was thinking, that I wasn't really expecting even any SEC approval, like maybe, I don't know, in the first month of the year. No, I thought it was going to be somewhere maybe closer to the midpoint of this year, something like that. I was kind of under this impression, but then these reports started coming in, and now me being again coming back to the whole skepticism thing, I'm thinking, like, is this like just like something to feed the crypto world? Because now, for example, they might say, oh, you know what, it's not working out this week, but boom, let's sell off. So I'm not really. I'm really. What do you think? What's your?
Hey, crypto is all about sentiment. It's not all about sentiment, but it's quite a bit about sentiment. So whatever news, whatever is going to drive it up. I didn't know about the timing about the ETF, but that's driving prices up. The anticipation for the Bitcoin halving in April this year is also driving it up. Looks like it's going to be more upside. Looks like the bulls and the whales are running and swimming together.
True. So you remind me again, when is it, like beginning or the end of April, or because I've missed this part.
I'm not full bottle there, but it's somewhere in April.
Okay, okay. No, we'll have to just check it out ourselves then.
Yeah.
We'll because I don't know. For me, like I said, for me, it's one of those exciting things that you want to understand, but it doesn't fall in there any logic, and then your brain is just like collapsing because you're like trying to apply some sort of logic and experience and
Yeah.
knowledge, but you cannot because it's purely
Sentiment.
like whatever, like headline
Yeah.
driven.
Yep.
Okay, okay. So just a quick. So yeah, I mean,
Okay,
okay.
before we end off, we have one quick question there about the Swiss yen. I think we've done with Bitcoin. Let's end it
Swiss
off
yen.
with Swiss yen.
Swiss yen. I like this pair. I like it. Like there we go. Can I just jump in into that one and can and then
Yeah, you go, you go.
you'll take over from here. So basically, from my side on the Swiss yen, I've also mentioned this one in my one of my videos. Basically, overall, let's what I have here on my chart is I have a long term kind of more of a medium term upside support line drawn from the low of the 20th of March of 2023, and also then from the mid December, so around the 14th of December, we started having like a steeper up move, and this kind of created this other upside support line. Again, a little bit on the tentative side. Don't get me wrong, maybe not the most important line there. However, so far it's kind of doing a good job. Now, what I'm seeing here right now is that we are struggling with this 170.53, 55 zone area ish, roughly, because that's the kind of the highest point of November. So we're struggling with the highest point of November at the moment. Yes, we've pierced through it temporary, but that was like just a little false breakout. So we're in a way we're struggling to overcome it, but we're not moving far from it. So and we're still above this upside line. So for me, everything's looking quite bullish as well, because it also seems from the very, very short term perspective here, maybe there's a little bullish flag forming. But even then, I still need a confirmation break. All these things are kind of, for me, pointing right now towards the upside. However, without a confirmation, I'm not going to do anything, because how many times I've seen this? Let's say everything, all the stars seem to be aligning in one thing. Everything is looking perfect, but then we drop here, for example, heavily to the downside. We test, let's say, the 50-day EMA. We reverse back up. So basically, this way, a lot of traders get taken out, and then we pop higher. So that's what I'm saying. Don't rush into this. From my perspective, it is looking quite. I'm cautiously bullish on this one. However, if it starts breaking below this upside line and remains below it, I will maybe actually consider a bit of a larger correction to the downside towards this upside line, at least initially, and then we'll see. But I really like this one to the upside, but again, a confirmation break for me is still needed. I'll pass it on
I,
to you.
yeah, I'll use that chart and I'll say that, three words: follow the trend.
Absolutely.
As much as I would love to sell this down, you look like a genius when you go counter trend and sell it back down with the double top formation up there. But you just want to trade it up, follow the trend to the upside. It's breaking. It looks like it could break 170.50. If it breaks past that point, go to the next round number, 171, 171.50. Then as you build that profit margin, possibly then you can start looking for some smaller size speculative trades to the downside.
Yep.
So follow it up, but then might push back down.
I agree. I agree, and I really like this pair as well. It's like, it's kind of in a way similar like AUDNZD, like in terms of like similar currencies, right? I mean, so it's like in the same field as AUDNZD, but a different sport. But here, I mean, I like to call it like the battle of the safe havens. So yeah, it's really nice. I mean, really interesting pair. I mean, if somebody thinks that if they're like used to your AUD USDs and Euro USDs and GBP USDs, or no, there's much more, like a much bigger world out there, honestly. Like, so explore that one. Okay, so just wanted to quickly also ask you, personally. Look, we'll start wrapping this up, and because again we went a little bit over our time, but hey, I hope, like I said, nobody's gonna shoot us for that. But
We're
yeah,
enjoying it. They got more questions coming in as well. They
yeah, for
warmed up
sure.
to us.
Where like go? I mean,
There's a question about EMAS.
yeah, yeah, just a
E-
second. I'm missing who wrote that question, because I'm lost right now in
So
all the questions.
just go to the most recent one. So Diana's asking if the
EMAs, yeah, yeah.
EMAs.
Because they're considering they're lagging and usually use them for stocks, but not on forex. Sorry for the silly question. No, it's not a silly question. Look, again, yes, they are lagging. However, it's like a mean, right? I mean, the price or the rate still eventually comes back closer to it. So, it's how to put it, like, not to sound like that it's for a sure thing. No, it's whenever something goes, like, deviates a lot from the average, so that's kind of, you can see that there's like a bit of an extreme, so eventually it has to normalize and it has to come back. So EMAs, for me personally, they help to kind of see that. So I look at it, how far we have deviated, moved away from the 200-day or the 50-day, right? And this way I can see, for example, how big of an extreme it is. Again, that's personally for me. I don't know. What can you add, Engine?
I don't use it,
You don't.
so
You don't use it. Okay, that's fine. No, that's. But what your preferred tools? Which ones do you use?
I'm all about trend, support, resistance.
Okay, yeah, yeah.
I use my Bollinger Bands a lot.
Oh yeah, I love that.
I've
I love that.
I've coded my own MACD just to make it a lot faster as well. And that's it.
Okay, no, no.
Fibonacci as well. Yeah.
And this is what I was saying in the beginning of the show, and this is where we actually, what we were saying. Sorry for taking all the credit. No,
No, no,
what
no.
what we were saying, that everybody has to find their own style, their own trading. You, like I said, you pick all this info, you put it in a funnel, and then whatever works for you, you do your tests, you run those tests on a demo. uh so yes, you do all your tests and run all your tests. You see what's working the best for you. Maybe, like, it'll be the Bollinger Bands. Maybe it'll be the MACD. Maybe it'll be the EMAs. You decide. And actually, I have to say one thing as well, that it sometimes can vary instrument to instrument. So even in forex, for me personally, sometimes one thing doesn't work. Let's say on, I don't know, on Euro NZD and Euro Aussie, not like the same indicator for me sometimes doesn't work. So it's like, it takes my, but well, unfortunately, that's the game we're playing here. We need to find what's working. Let's say if you're focused on this pair, what's working on that pair. If you're focused on that stock, what's working on that stock. You cannot, like, just apply the same stuff. Sometimes you can. That's why I have my EMAs on there. But let's say when I have my EMAs on the chart, I can see straight away that something is not working, and that's why I'm telling people, hey, don't use the EMAs in this sense here. It's just there for the show, but don't. Do we have any more questions in the chat?
No, no. I think we can wrap it up.
In that case, I have a
Yeah.
question for you,
Okay.
Jin.
Sure.
What's your favorite asset class, and what's your favorite instrument in that asset class to trade?
Well, I have to say FX.
FX. And what's your
I have
favorite
to say
pair?
FX. I range. I when I first started, it was the Aussie dollar, just because I was sitting in Australia.
Mm-hmm.
Then the pound dollar during the whole Brexit period, because it was just being crazy. But I think the US yen has always been my long term
Love.
favorite. Yeah, long term love. First love, long term love.
Okay, no, that's great, because for me, yeah, I kept on changing. Honestly, it's like, once I kind of went from the idea that, okay, for now, what's working for me? This. Okay, I'll stick to that. When it stops working, I'm like, okay, let's go search for something else. So it's like, I keep on, like, trying to find, okay, at this point, what is this working for
Mm.
me? Perfect. Also, a question. In general, like, well, what's the, like, let me phrase it correctly. What's your opinion in general about the market, like, or let's say the stock market? Let's look at this. Let's say the in equities in general. What do you think that how we could end this year? We kind of briefly touched on it, but just wanted to summarize everything. So these, for example, the indices. What do you think? Are we gonna have like more of a downer, or will it still continue rallying?
I think we're going to see a little bit of a downer come back in, but we're going to end up higher than we started. So a
Okay.
correction through the year, and then after we're going to see that come back up.
Okay. So closer to the end of the year, basically. Again,
Yeah,
another like Santa Claus rally or something.
yeah, yeah.
Okay. And so in terms of the FX, your favorite one, what do you think? Which currency will be, not the currency pair, but the currency? Which currency will be or could be the strongest one at the end of this year?
Oh,
I know it's a very difficult question because you want to
yeah.
pick several. But look, it's just like I said, it's just for
You
fun.
know,
We're no investment advice here, but
it could very well. It could, and I'll surprise you with that. Is it could be even the Aussie dollar?
Australian
Maybe.
dollar. Okay,
Yeah,
okay, that's an
maybe.
interesting one because I wanted to say something like a Swiss franc actually. So, but again, or
Yeah,
I'm in the between Swiss franc and Japanese yen. Actually, I don't know.
I was thinking Aussie dollar or Japanese yen. So
Okay, okay,
maybe
good.
we have a confluence in the yen.
Okay. And also in that case, the last question, let's just finish this one off because I think that people are tired of us already. And look, the last question, who do you think, not who, but which of the precious metals will be performing the best? Will it be silver or will it be gold?
To be honest with you, I don't look at silver too much.
Okay. So it's
Yeah.
okay.
So yeah, but it could be silver. I think gold might be a little bit. The
O-
upside seems to be a little bit limited.
overhyped, and
Yeah.
okay.
Yeah. So it
No,
might
that's
be silver.
No, that's interesting. That's interesting. Thank you. Oh, D Diana, or saying
It's
that
yeah.
yes, CHF, in my opinion. Well, we all
We've got it
we
covered.
sorry.
We've got it covered. We've got the
Yeah,
Aussie, the yen, and the Swiss.
yeah, exactly. But what's going to be surprised is suddenly like Argentinian peso comes out and recovers. But I mean, that's not that's not going to happen anywhere soon, unfortunately. But that's yeah, we'll see how that side of the world will cope. Anyway, I want to give a massive shout out, thank you to you, JinDao Tai. I'm using your full name here, suddenly just to show my appreciation and show my gratitude to you. Just like I said, thank you very much for jumping on this session. Just for everybody else there, we will have another session, another joint session next week.
Tune in
So
next week.
yes, so please jump in onto Jindao's webinar. You will have that. You'll see that in the upcoming streams. You'll be able to view that. So Tuesday, right? Remind me. Yes,
Yep.
Tuesday.
Same time next week on
Same
same
time
place.
next week.
Yes.
Yes, exactly. So yes,
Similar
I
place.
I really
Definitely.
really appreciate that. Thank you very much. Thank you for your time. I think, in my opinion, that was a great show, great session. Look, what people can do if they have, for example, something in their minds, they can actually maybe leave a comment in that when we'll have the upcoming when the upcoming stream will be set up. I don't know, did you set it up already or not yet?
Uh, Maybe right after this.
Okay, yeah. Whenever
Yeah.
you'll see, basically, you'll see the upcoming stream, and if you wish, you can, for example, leave a comment in there straight away, so that when we start, maybe we'll pick up, on that one. If you have anything to ask, and yeah, and like I said, just like I said, just we'll try to be as proactive as possible. Once again, thank you very much, and I
Thank you so
shall.
much, Darius.
Good
Thank
luck.
you, Easy
Good luck.
Markets as well.
Good luck
I
this week.
appreciate the opportunity. I appreciate the opportunity. Love speaking to everyone here. Looking forward to the next one, and let's keep it going.
Fantastic. Everybody have a beautiful remaining trading week, and yes, we will see you together on Tuesday, next Tuesday. Thank you very much, guys.
Take care.
Bye bye. Switching
Bye-bye.
off right now. Bye. Uh-oh, you just broke a digital image cursing us all to 7 years of market volatility. Undo by subscribing to our channel.